Hey, this is Jeff Rose, goodfinancialsense.com. Welcome, everybody. I got a little neat, exciting thing to share here. I was interviewed by Laura Adams, aka the Money Girl. She's actually now a contributor to the blog, goodfinancialsense.com, so be sure to check for her articles. But I had the pleasure of being interviewed by her for a little Skype interview that we did. This was our first attempt. Had a little static near the end, but we are learning. I am getting all my technical glitches out of the way. And she interviewed me a little bit about finding or interviewing a financial planner for your own services. And at the end, I shared some tips as far as the 5 mistakes to avoid when saving for retirement or for financial planning. So be sure to check out the interview, and I hope you enjoy it. We'll see you later.
Hi, everybody. This is Laura Adams from the Money Girl podcast and the author of Money Girl Smart Moves to Grow Rich. And today I am here with Jeff Rose. I am so excited to be interviewing him. He is a financial planner. He's got a business that's called Alliance Wealth Management. And I thought it might be a good idea to find out from Jeff what some of the typical questions are that he gets about financial planning. So, Jeff, maybe why don't you start out and just tell us what you do and what type of customers you have?
Sure. I've been a financial planner now for just over 8 years or so, and along the way, I've helped many different types of clients. Being younger, I got started in the business when I was 24, so I had a lot of younger clients that just want to start saving for retirement, start saving for their kids' college education, and also I had a lot of the baby boomer generation that were approaching retirement and had a large nest egg, like their 401k or their pensions that they've been saving into for their entire lives. And now they had the biggest decision, money-wise, to make in their lives, what to do with it. So they entrusted me to basically devise an income plan for them with that money so that they wouldn't outlive it. And that is really where my I don't say my focus has turned, but just my clientele has turned that way, just through referrals and through all the different events that I do. So right now I service probably about 80% of the baby boomer plus generation. And most of these individuals I say are people that they know they need to be invested. They know they need to be in the market in some way just to keep up with the cost of living, the keep up with their desires, in the golden years. And they just don't have the time, and they really don't trust themselves, with that amount of money. So they want to rely on an expert, like myself. And I don't say expert. I'm not trying to toot my own horn, but they want to rely on a professional to take care of them.
Absolutely. Yeah. So I'm curious what your opinion might be about whether everyone needs a financial planner. Does everybody need one, or are some people able to do it themselves?
Wow, that is a great question, because that is something I actually just took a poll of my email newsletters because I was really curious. I just had this hunch, because I talk to people all the time that don't have a financial advisor, that they've been doing it on their own, or they're not doing anything at all. And I really was just curious. So I emailed, my subscribers, just curious to know the feedback. And the questions I asked were, do you have a financial advisor? Yes or no, why or why not? And of all the people that responded, there was only about 30% or so that had a financial advisor. And
Wow.
that was kind of my hunch, thinking that most people don't. And a lot of common reasons were they didn't. Actually, the most common was trust. They didn't trust them. They maybe had never had some bad stories from friends or family members, or they had a personal experience where they had a financial advisor that sold them something that shouldn't have been sold to them, and they just didn't trust that direction. And other people just didn't know if they needed one yet. They didn't feel like they had enough money, I guess maybe to get started. And I think in all those situations, maybe you don't need a full-time financial planner to manage the investments, on an ongoing basis. But I think it's kind of like, you look at the doctor relationship. You don't need to go to the doctor every single day, but it's always advisable to go in at least once a year to have your annual checkup. And why wouldn't you do that with your financial life? Just to make sure that what you have in your 401k is where it needs to be. To make sure that whatever investments you've been doing in your own brokerage account, that you're in the right funds or the right stocks, the right ETFs. Making sure you have enough life insurance. So I think everybody needs to have some type of advisor, maybe not on an ongoing basis, for at least someone to check up in and kind of give them that annual checkup.
Yeah, that's a good way to put it. What are the different types of advisors that people might find out there, if they go online and do a search for somebody, tell us a little bit about the different types of advisors that people maybe would or wouldn't want to use depending on their situation.
Yeah, it gets so confusing now because right now like everybody's a financial advisor. Everybody has that title, and they used to be a stockbroker. You've investment advisor, insurance agent. But like right now I talk to just everybody and they'll say, "Oh, I'm a financial advisor." I'm like, "Okay, well,
Right.
what does that really mean?" And you just got to be conscious of. So the different types would be. First, like if you go to a financial advisor at an insurance company or insurance agency, it's just been my experience that they're going to lead in with some type of insurance product. That
Right.
could be an annuity, it could be some type of whole life or cash value life insurance. And, personally, I'm not a big fan. I don't want to like start harping down on that, but those are the ones maybe that I would stay away at least initially. I'm not saying life insurance is bad, but just be conscious of what they're pitching to you and what they're trying to put you into. Um, if you go to any type of big brokerage firm, you're going to have it could be anywhere from a commissioned advisor where they're going to sell you a mutual fund or an ETF and they're going to earn a commission off that product. But they also could have maybe a fee-based relationship or advisory relationship to where you're paying an ongoing fee, a percentage of your total investments with them. And just make sure you're clear on that because where the waters get kind of muddy there, you might pay an ongoing fee for like your account with the firm, but then there also might be transaction charges within the account. There could be internal expenses within the investments that you own. So the next thing you know, I mean, you think that you're paying, say 1%, you're really paying 2.5%, and that really starts eating away at your money, and it's hard for you to grow it. So I mean, and that's why I almost my heart goes out to the consumer because there's so many different ways, and if you don't ask the right questions, if you don't know what to ask, you're just basically at the mercy of this advisor. So just kind of be abreast of that. And the other, I think the last one we talked about doing the annual checkup. There are a lot of I would call fee-only advisors. They basically just charge you by the hour. And these are the folks that will just meet with you, kind of analyze your situation, and just kind of give you a kind of a game plan. And I think maybe even a financial coach, I think also would be maybe kind of fall in that category of just somebody just giving them guidance on where they need to be.
Great. So, what type of advisor are you? And tell me a little bit about how and your firm charges people. What's a typical customer? What kind of fee structure or compensation do you get for a typical customer?
Sure, that's a great question because just to kind of give you an insight, I worked for the big brokerage firm, so I've been that direction. I know that structure, and then we left and we started an independent firm. But when I became independent, I had the ability to do commission, and I had the ability to do fee. And I was doing that for about 3 years, and the conversations got so confusing because it depended on the client and their situation. And I kind of liked it because in some cases, maybe a commission relationship was better for the client if they weren't doing a lot of active trading. They just did like maybe buy one thing every once in a while. But the majority of my clients we did on the advisory relationship, the fee base, to where I was managing their portfolio, helping them derive an income stream. But whenever I was having that conversation with people, it's just like, well, here I'm doing this and here I'm doing this. And I just got frustrated with it and really wanted to have a more streamlined a presentation or approach when talking to people. So recently I just created my own registered investment advisory firm to where now it's completely a fee-based relationship. And the fee ranges anywhere from 1 to 1.5% is what my ongoing fee is. And that's all encompassing. That there's no more transaction charges, there's no IRA fees. At this time, that covers, doing a financial plan for the client and updating that on an annual basis. And basically the client can call me, not preferably on the weekends, but, they can call me whenever they need to. And if they've got a question about anything, I help clients, to figure out how much they need to save for their kids' college. I'll take a look at their 401k. That's not even part of what I'm managing, but I'm going to take a look at it for them and just to make sure it's where it needs to be.
Excellent. That actually sounds like a pretty good deal compared to some of the fees that I've heard. So, as a registered investment advisor, what type of responsibility do you have to the client? There's a lot of confusion, I think, out there in the marketplace about what is a financial advisor's responsibility versus a broker's responsibility in terms of recommending a stock or, an exchange traded fund. I think it's important that people get to know an advisor who can give them some level of responsibility versus just throwing out a stock here and there,
Yeah.
as a good pick that they think is hot right now.
Yeah, the big thing, and the consumer may never understand this. I know that the profession or our industry is trying to do a better job of making them understand. But basically, the two key words here are suitability and fiduciary. And with the previous relationship, it was more of a suitability issue where I need to recommend. I would take a look at a client situation, and then I would recommend an investment that I felt was suitable, for their needs. May or may not have been the right thing, but that's what I felt, based on the situation. Whereas now, as a fiduciary, as a registered investment advisor, as a fiduciary, I am solely responsible, for my client's best interests. I have to make sure that I am doing what is absolutely right for them, and I am absorbing, that role. And when before I did an RA, I really didn't. I saw that word thrown out there a lot, and I know a lot of other RAs were throwing it out there, and I'm like, what does that really mean? And now that I finally kind of get it and kind of grasp it, it's really important to me. And when I talk to other attorneys and other professionals, and you talk about the word fiduciary to them, I mean, they get it. They understand,
Right.
what that means in that client-advisor relationship, and there's just a tremendous level of respect for it.
Yeah, I come from the real estate world, years ago, and so fiduciary relationships with clients, were very important in that industry as well. So yeah, I want to make sure everybody gets that if you go to a broker, they may or may not have a responsibility to look out for your best interests, basically. But a
Exactly.
registered advisor, RA or RIA, registered investment advisor, that's part of the title. That's part of that designation that they have a higher level of responsibility. So I think that's a great, a great designation to look for in an advisor. And also, Jeff, I wanted to ask you about, maybe a little bit about the differences that you see in men and women that come to you. And I get a lot of questions, different types of questions from men and women about finances and planning. And I'm wondering if you see a big difference, working with a couple or just a husband or just a wife. Is there a big difference in the way that men and women approach money and financial planning?
Yeah, not to say it's a 100%, but it's so funny when I look at my baby boomer client, look at that generation of husband and wives versus, the Gen X, not so much Gen Y, but Gen X generation of clients, husband and wife, where my baby boomer generation, and most of that generation, I have, husbands, that worked, 10, 12-hour days, and the wife, was the homemaker, and to where they basically relied on the husband to make all the big money decisions. And I always make sure that I bring in both clients. I don't care if she doesn't, she's still a part of the equation, because money is, that is the root of, could be happiness or unhappiness if we haven't had that proper discussion. So I want to make sure I understand what her thoughts, what her concerns are. But for the most part, I mean, they've relied it completely on the husband. Whereas my Gen X, I'm seeing more of the wives now being having more of a say, in the money matters. To where now the husbands have kind of. This is the experience I have in my own office where the wives are doing more of like, well, we need to do this, we need to do this, and I was like, oh yeah, okay, that sounds good, that sounds good. But I see more of like a leadership role than I've ever seen before, and especially with the baby boomer generation. So I think that's kind of neat, to see that.
Yeah, it is. And I do a lot of one-on-one coaching with folks, and the majority of them are women who tend to be, like you said, they're kind of taking on more of a leadership role. And for whatever reason, maybe they're going through a divorce or they're just kind of waking up and realizing, hey, I need to be involved. I need to know
Yeah,
what's going on just for my best interest.
yeah.
So, yeah, I think it's great that younger women and younger couples are really approaching money much differently than older generations, and it's a really good thing. Yeah, so go ahead.
Another thing I'll say, one thing I will say I have noticed, and I think that's is pretty well universal, is that women generally tend to be more conservative in their investment tolerance. And so even in that leadership role, I always feel like the husband's like, oh, we need to make 12% return, 15% return, whereas the wife generally is a little bit more on the conservative side, which, it could be good or bad. I just want to make sure that we're where we need to be. But that is another thing I have noticed is generally more conservative.
Yeah, definitely. I think women have that bag lady syndrome fear that we always hear. Sometimes women are really afraid of the consequences, of poor planning, and that's a wonderful thing. But you can take that to an extreme to the
Yeah.
point where you don't invest aggressively enough, and therefore, you're not going to hit your retirement goal. So yeah, I think having a balance there between, a man and a woman's perspective really probably ends up helping overall if you kind of blend both of those perspectives. So yeah, that's great. I think if people work on money together.